What's up traders, Tom here with another video. Today we'll be talking about our technical analysis thoughts and levels for the SP 500 and an in-depth look at the stock market for the week ahead. This one shouldn't be missed. Stay tuned. So today I really want to use our technical analysis top-down approach to go through some important facts and figures on the SP 500. But before that, I thought it was worthwhile mentioning a couple of quick articles. One of them is that our good friends Goldman Sachs have lowered their US GDP forecast again. And during this crisis, Goldman Sachs have certainly been up and down and all around with their calls. What I think is more notable about this is that they are pretty much changing the GDP from 4.2% to 4.6% contraction, and that they are starting to kind of worry a little bit over this juddering effect of closing parts of the economies during the reopening process. It'll be interesting to see what the Fed and of course Congress do over the next month, and we'll be covering all of that plus earnings on this channel, and that will be the key thing that will move the stock markets. We don't even know what the earnings are going to be. In fact, we have no clue about those, yet we have massive $10 trillion rally. So if you think that might interest you, remember to subscribe and hit that bell, and we'll be covering all of this and more, including some seriously in-depth kind of tutorials on technical analysis. I want to cover as much as possible to help everybody out there in the community. As we like to do, I thought it would be worthwhile mentioning some of the key kind of news for the week ahead. If you don't have an economic calendar, forexfactory.com or of course MarketWatch here has some good kind of economic calendars. I like this one if you're just looking at US news, and US is the most important right now. We don't have too much kind of notable stuff coming out. The big one will always be things like the continued unemployment claims that come out on Thursday. We'll have to see if there's any surprise announcements from the Fed, or the Fed do come out. We're not sure on that just yet, but this is the kind of week ahead in terms of the analysis. So I want to start our in-depth look at the technical analysis for the S&P 500 by talking about the real market versus futures. Anybody that follows our channel, or if you're a new subscriber here, knows that I'm a big fan of looking at the technical analysis on the real market over the futures market in terms of breakouts. So I've got here the monthly, and we like to go from the monthly down, and the reason we do that is we want to be aware of all the key levels. Even if you're trading a 5 or 15 minute chart, you need to know the key zones in the market. You also need to know if a monthly is closed up or below a key zone, or even a weekly, because if it has, it signals a huge amount of buying pressure or selling pressure from the big money players in the market. Here we've got the monthly, and I wanted to quickly draw everyone's attention over here during the uptick that we saw in 19. So the reason we want to draw over here is we've got resistance, and then notice this candle here where the monthly closed and the next candle that opened was above the previous resistance zone. This pretty much was the signal when this opened above and closed above that the market was going to move higher. Now you might say, well, it came down after that time, and there was definitely opportunities there to pick up kind of the dips. But this signal here was the breakout. It was the first candle that closed above this zone, and it signaled that the market was ready to move on to the next zone. The importance of that really can be seen also during this crisis. Notice how there was no monthly close underneath this 2477 zone. Did it close under there last time it crashed during 18 to 19? No, it didn't. Did it close under there this time? No, it didn't. We go back over to the left-hand side. You'll also notice how important the monthly was over here. Very strong resistance at the 21 kind of 20 zone. And then when the monthly closed above, nice bullish hammer here, by the way, and bullish hammer here, into the closes, it closed above, and that was the signal for longer term investors, people that were going to be in the market for at least a few months, if not years, that we were ready to move to the next zone. So the monthly is an incredibly important support resistance line to always be aware of. And you want to know whether there's a shooting star. Remember last week we were talking about a shooting star potentially appearing here. Now obviously the market went up off that period. But if there was a shooting star, what would that mean? Well, it means significant money is at play to get that candle down, to get it showing that bearish signal. And notice over here before the crisis, look at this. We were actually talking about this in one of our webinars. The shooting star on the monthly then it went higher. Remember, at this point in January, they did know about the virus. They did know about the concerns. So we had a shooting star, we had that fake out, and then we had the big sell-off. So the monthly leads the way in terms of most important chart. The second one is, of course, the weekly. And this is another important chart. We want to see weekly closes or above key zones. Here we have where we can start to draw, I think, a bit of an idea of what's happening in the market. So as soon as I see this as an investor for a long, long time, I think, wow, we have a very strong weekly at the 3,000. Multiple kind of close points around this zone. We can see it's bounced off this zone. It's sold off, it's bounced up, it's been unable to get under it. The next thing we will do is we basically say, okay, well, we've got a body zone here. Remember, bodies are the most important part of a weekly candle or a monthly candle or any candle. The reason they're the most important part is they show the confirmation of the close. So they show that the commitment of the buyers or sellers has managed to stay in that particular candle for the entire week. And at the end, they've pushed it to that level. Very important to understand the commitment of the buyers or the sellers. So we've got a bit of a structure here now in terms of where the market is. And I hear a lot of people use that term. They say structure. And structure is a cool concept. I guess it's basically you're just trapping the market. And when you have structure, you have clearer points that you can then see the market break out of. And then you can trade potentially role reversal off those areas or conservative entries. So we have the weekly here, great level, 3,200, 3,000. We've trapped the market effectively within a zone. Once we've done that, we can then jump into the smaller timeframes and the daily comes up and we can start saying, well, what are we doing here? Well, we want to somehow a little bit assess what is happening. So we then go down and we kind of draw our lines to fit the bodies of the daily candle. The reason we're going to do that is because what this then does is it shows us what's been happening on the daily. But if we do something like this, we need to always be aware that if we see a daily close underneath this zone, that doesn't mean that it's going to be a weekly close. So we also want, if we're going to sell it and we're saying, okay, we want to be in this for a few weeks, potentially to the sell side, we want to go and check that weekly at the end of the week, see if it's also closed bearish below the zone. If it hasn't, we need to be concerned about our trade because remember, we want the commitment of the buyers or the sellers in the direction that we're going in to be with us. So then we start drawing up our other key zones. Here we've got our 3,150, we've got our 3,000, both key alert zones. I would highly suggest you set these alerts if you're a trader or an investor in the markets as their key technical analysis zones. And then we have that 3220 zone as well up here at the resistance. What this helps us do is it helps us kind of set the parameters for our week ahead. And we've done this using the non-futures market. Can we trade futures? Yes, we can. Can we invest in futures? Sure, you can do that. But what you want to do is you want to set the parameters on the real market where the real market flow does. And we do this from a technical analysis price action standpoint. And then what we do is we bring in our indicators and we bring in our other reasons. We always talk about 3 to 6 reasons in our trading course. We need multiple reasons to be in anything. If you're not in that trade with at least 3 to 6 reasons, then you're probably not going to do that well. And when the market breaks out of something like this, so let's say it breaks out of the downside, then what we want to do is we actually want to take the conservative entries as well, ideally. So you don't necessarily want to take the breakout. You could see the weekly close down here. And if the weekly closes at this point, usually the next week we'll see kind of a bit of a pull up and it will come to that conservative entry 3,000 psychological. The reason it does that is the market knows that heaps of people are going to be selling here. And on the smaller time frames, it kind of steals all their money, comes back to the conservative entry, and then you'll usually see the move or the change. And we'll be talking about this change of trend and how targeting this zone is actually the most statistically likely zone to do well on. But these are the key levels that we're setting for this week. It's very clear that we're going to want to do this. Then we can jump into things like the 4 hour. Once we're in the 4 hour, we can see how the price actions moved off it. So here we'll talk about what happened last Thursday. Well, we saw those non-farm figures. We saw how they were supposedly strong. I've mentioned in yesterday's video how they're maybe not as good as people think. But again, on the 4 hour, we do not have a real market close above this 31.50 kind of 60 area. Now, if we go to the futures contract and we go down to a 4-hour, look at this. Very interesting. Look at what we see here. A 4-hour hasn't closed above this wick really, but it has closed body-wise above this zone. Now, the importance of that is that we cannot trust the futures to be showing us confirmed breakouts. Remember, this was technically a confirmed body breakout on the futures, but the real market did not show us that. So the importance is always go back to the real market and see whether it is confirming you. I can stress this enough, but it's so important as a person who is invested for a long period of time that you must wait for confirmation. And when you get that confirmation, you know the other traders are with you. The futures market does not represent the biggest volume of the day on the S&P 500. So we've got this zone. We can see that the numbers were a little bit strong, but at the same time, there was weakness. The Fed balance sheet, which we've discussed, is actually decreasing week on week because they need to save the bullets and they're coming under some scrutiny. And what is going to happen this week? Well, we're probably going to trade within this range, but if we get outside of this range, that's when we want to also start trapping. So if you're somebody that wants to trade, let's say, stochastic indicators, MACD divergence, all of that, you can actually do so within this range. As it hits these peaks, you might see divergence. You might see stochastic overbought. You might say, okay, well, I'm going to put my stop loss above kind of the wicks and I'm going to place that trade short. Or if it comes down the bottom, which is the more preferable one probably, is to buy long because you know that the Fed is probably going to come out with an announcement or something like that at this level, like they usually have. All key zones, all key kind of plans and theories. And you can trade within this very, very easily. The other thing that can happen is it comes out above and you could potentially pick up the roll reversal after the confirmation close happens and then it goes back into the previous resistance. That could be something or something that may happen this week. That would be, an idea that you could put in place. Another thing that could happen is it would come all the way back down to this level, break through it and close. Now, if we saw that happen and it went to a weekly, that would be very, very powerful. And we've seen just having a look at that other chart, how that could look. So the 4 hour is very, very important, great chart. We can go down to the 2 hour, see how price has interacted with this zone. One thing that I automatically notice here is that we've got this strong support around 3,100. Last week, we talked about how when it broke past this 3084 zone, we're on the smaller time frames, how it was going to probably bull into 3160. It certainly did. It's then rejected that zone. We'd usually expect that rejection to go down to around 3100. If it hits 3100, there's going to be some buying support there, like we've seen previously, where the support is here on the left-hand side. And this kind of zone here will be the no-go zone, as in there'll be more buying support probably than selling support. And then once it gets down underneath that level, there'll be more selling kind of levels down to the 3000. So it's that structure or the concept of recognizing the key areas in the market and then alerting yourself to those and setting the alerts for that you can literally trap the market within a zone, like when it's trading like this. And then you can set things or set traps for if it happens, your phone gets the alert. You can do so in TradingView. So it's very key to set alerts, I guess is what I'm saying. And I'll say it again and again and again on this channel. So that's pretty much our trap for the S&P 500 this week. I think that's some of the important levels. There's no key trade right now, but if it breaks these levels, I think there's definitely opportunities for traders and foreign investors, and we'll have to see what happens. The other thing that we always talk about is the dollar index, and the dollar index remains trapped within a zone. We have a trend line happening now on the dollar index. Look how it bulled off this after the non-farm payroll. So it actually went up, even though the non-farm payrolls were technically positive, and you would assume that, of course, there was this risk on sentiment where people were like, oh, it's so great. But because of the Fed's balance sheet and because, of course, what's happening with this crisis right now, the dollar actually bulled up. And if this continues, we're pretty much in an ascending triangle here where we've got multiple kind of higher lows and we've got this equal high. Now, what do we know about ascending triangles? Well, we know if they break, they go around 2/3 of what you expect here. So if that did happen, then we would expect the market to go up here to around 99. Now, I've mentioned several times, I actually think it might struggle a lot. There's a lot of headwind in this area. So is it a good trade? Probably not a good trade, but definitely an opportunity to then go and look at cross pairs like Euro, US dollar, S&P 500, other things that are going to be affected if this breaks out above the resistance. Now, with ascending triangles, they actually fail a lot as well. So if it comes through here, what might happen is it might get down to this low, break through, confirm close, come back up, test this dynamic kind of trend line support that will act as resistance. And then we could see it break down and continue further on. In fact, it might even go the entire leg of the previous move. If that was to occur, well, we would be seeing a huge amount of risk on in the stock markets. Do we think that's going to happen? It seems unlikely at this stage, but at least there'll be heavy support at 96.50. There'll be heavy support at 96. And if it gets under that zone, well, it's definitely going to gravitate towards the next key support and resistance zones. And that's where, again, you want to go back and do your top-down approach, find out your monthly, find out your weekly, find out your daily, etc. If you enjoyed this video and this style of content, please let me know in the comments down below. So if you've enjoyed this video today, make sure to subscribe and hit that bell. And of course, we'll be coming at you with more content this week. Have a great week. Happy trading. Hopefully everyone gets some great investments as well. And we'll see you tomorrow. Bye.